It's true no company can accurately predict the future. Our whole reporting system is designed to calculate the past, and then it's up to the investor to determine what's likely to happen in the future. If you buy Apple stock based on their earnings today, what you're really thinking is that those earnings will allow for dividends to be paid whenever Zuckerberg wants to pay dividends, which could be a decade from now. So what you care about is the dividends. All you can get is a report on the past. Likewise, we can't ask companies to tell us what the temperature of the planet's going to be in 2034, but they can tell us how much greenhouse gases they emitted in a prior year. Sir, it's my understanding that under your Scope 1 and Scope 2 proposal, companies would simply be disclosing what their greenhouse gas emissions were last year, and they would include in that under Scope 2 the greenhouse gases of the utilities that they use. Would they be required to predict temperatures next decade?
No, they would not, Ranking Member Sherman.
But they would have to disclose their own company's emissions during the prior fiscal year.
The climate risk disclosure proposal does include certain transition risk metric requirements for certain public companies, including greenhouse gas.
Well, yeah, that's the risk part may have nothing to do. The company may be entirely green. They may generate all their electricity and everything with solar panels. They may get an award from the Sierra Club. But if they're growing coconuts in the Maldives, they may have a substantial climate risk. It's only 4 feet above sea level, and in some places 4 inches above sea level. I want to shift to the conflict of interest rules. I mentioned these in the opening statement. You're required to issue them, and they make sense as to the first and second prong that you have. The issue here is, does the promoter design a security and then bet that that security will tank? If I was going to buy a car from a company that had bet that that car would blow up, I'd say that's very bad. If, however, General Motors has bets that interest rates will go down or that gas prices will go up or that the Detroit will be in the World Series, I don't care. They're not betting that my car will blow up, nor are they betting on something about something that they control or that they designed. So it makes sense to have your first two prongs, that they can't sell short or have a derivative that in effect sells short the very security that they design. Do we need to make clear, and do you think you do make clear in your proposed regulations, that the promoter of an asset-based security could hedge their interest rate risk or otherwise bet on the interest rate markets?
Yes, Ranking Member Sherman, the proposed rule that you're referring to implements Section 621 of the Dodd-Frank Act. And consistent with that statute, there are in the proposal exemptions for hedging, bona fide market making, and liquidity commitments.
Well, even if it's not hedging, you hedge an interest rate risk if you bet interest rates are going to go up because you have a big position in debt. You may just want to bet that interest rates go up because you think interest rates are going to go up. It's an overall part of the economy. Do you make it clear that on the one hand, you can sell an asset-based security, and the other hand, you can buy a debenture which will be profitable if interest rates go up?
Yes, Ranking Member Sherman, the proposed rule would address conflicts of interest by certain securitization market participants. And the proposed rule includes a definition of what those conflicts of interest would look like, including betting against the asset-backed securities or synthetic asset-backed securities that are being...
I would hope to work with you further to make sure that if you have a conflict if you are betting against the design that you created, but simply betting that interest rates are going to go up or some other part of the economy that you have little or that you have no control over should not be considered a conflict of interest. And I look forward to working with you on that, and I yield back.